All right, so super excited for my guest today, David Baeckelandt. He's been a new friend that I've gotten to know on a deeper level. Met him one time, and I think we've met almost 3, 4 times together over lunch, over dinner, drinks, and just a really interesting person. And I think a great person that people can also learn from as a role model in the asset management industry. So David Baeckelandt works for Sumi Trust. Sumi Trust is essentially the largest Japanese bank and asset manager in terms of AUM, essentially for anything headquartered in Japan. I believe, David, you've referred to them as pretty much the BlackRock of Japan, essentially, right?
That's right. And Joel, great to be here. Great to see you. I have enjoyed every one of our interactions and love your energy. So thank you for having me today, and just delighted to be part of this podcast.
Yeah, look, it's a huge honor to have you on here. And, I think one of the hot topics that you and I are really passionate about is private markets. We've talked about technology solutions that have
Yes.
worked, that have not worked. We've talked about several service providers that provide that data to LPs, GPs, institutions. So I think we can go through all of that. But before we go that deep, why don't we learn a little more about David? So, David, why don't you talk to us
Sure.
about your early education, where you grew up, and how you kind of got into the industry, and kind of how you ended up at Sumi, and then we'll just take it from there.
Great. Thanks, Joel. Yeah, so my early education, I grew up mainly in the Midwest, mainly in the Chicago area. Went to University of Illinois down in Champaign-Urbana. Started working on my PhD in Japanese history. Got pulled into some business ventures as an interpreter and translator, and then translating a book from Japanese to English on the Japanese stock market for a couple of my Japanese professors. And then from there went to a firm called William Blair, where I worked actually went originally for a couple of years to a Japanese bank, worked for them, and then from there to William Blair. And then William Blair sent me over to Tokyo, and I set up and ran an office there. So, and while they're invested in some Japanese private equity, made a little money, thought I was a master of the universe. I came back to the US and have gone through a couple of iterations, either working for money managers or working for a couple of consulting firms, Mercer and Cambridge Associates. And today I work for Sumi Trust, as you pointed out. So thank you.
Yeah, no, really exciting. So tell us a little more about Sumi Trust, how the organization is broken out, and then just tell us a little bit about the ecosystem that you've been observing in Japan, how Japan's evolved, and now how the U.S. counterparts are, leaning in and investing in Japan or investing with Japan.
Great. A lot of great points there. So Sumi Trust itself is a predominantly Japanese organization, although we have
Mm-hmm.
offices around the globe. Sumi Trust is publicly traded, ticker 8309. Tickers in
Mm-hmm.
Japan are numbers. And the asset management part is just one of many parts of the bank. The bank is traditionally known as a trust bank, so it plays a role similar to both trust banks in the US. So think of
Mm-hmm.
Northern Trust, et cetera, as well as investment consulting firms such as Mercer and Cambridge
Mm-hmm.
Associates, in terms of acting as kind of an OCIO for a lot of the pensions and endowments and foundations, and simply the trusted advisor to many of the ultra high net worth individuals in Japan.
Sure. And tell me, kind of a little more about the culture. What are some of those ultra high net worth investors in Japan looking for? What are some of the, type of assets, whether they're alternatives, whether they're the more conservative type of assets like steel or real estate? I guess, how is that makeup in terms of like the evolution of that? And then tell me a little more about like maybe the next gens, right? Do the kids want
Yep.
to kind of stay involved in the same family businesses, or are they trying to get into more impactful or tech focused ventures?
So lots of questions there. So just to run through what I recall,
Mm-hmm.
one is the market in Japan for investing, and the interest and appetite for
Mm-hmm.
investing among Japanese individuals has been predominantly focused on those assets that are capital preservation assets.
Hmm.
So, of course, Japan went through roughly 3 decades of down equity markets. And this, together with the fact that Japanese fixed income yielded 9%, high single digits when the Japanese equity market started going down, meant
Hmm.
that many investors felt more comfortable with domestic fixed income. Of course,
Yeah.
now with rates being as low as they are in Japan and money essentially being free to borrow, the investors have started looking overseas.
Hmm.
In the last few years, there's been a number of changes. More recently, or most recently, earlier this year, new regulations in terms of the Japanese NISA accounts, which are kind of like a 401k slash IRA that is not taxed, and the amount of money that can be deposited into it
Hmm.
has sparked a wave of Japanese investing in riskier assets, such as equities. And that means that they have looked predominantly offshore, especially with the yen taking a slide from roughly 103 back in the beginning of 2021 down to the low in last month or July
Hmm.
of 100, just about 160 yen to the dollar. So they've looked at riskier assets, U.S. equities, foreign equities in general. They've looked at at investments that have high volatility, such as small caps or mid caps in the U.S. equity market. And they've also looked in a lesser level, more on the institutional side, to alternative assets, just private equity, private debt, private real assets, and so on.
Can you go a little deeper, because I know you've done some really great research on just the private markets and, really appreciated that, analysis and materials that you shared earlier. But, can you go a little deeper on the private markets and just that ecosystem? How is
Sure.
that being unpacked? I guess, is there a certain percentage of venture, or you don't have to,
Absolutely.
specifically state any percentages, but just kind of like, when you think about private equity, are you thinking about like mid-market? And then, is that also kind of inclusive of like venture and then growth equity as well? And how have you seen that appetite kind of evolve over the time on the private market side?
So on the private market side, private markets were historically in Japan really driven by corporate VCs.
Hmm.
And they dominated the market up until, let's say, 20 years ago. 20 Roughly 20 years ago, there started to develop a ecosystem of domestic private equity firms,
Hmm.
usually very small, very limited in AUM, usually just a few hundred million, usually very, very cautious in terms of their investing approach, and very savvy in terms
Hmm.
of making their investment decisions.
Yeah.
That has evolved. So it's evolved in a couple of directions. One
Hmm.
is the influence of offshore private markets, especially the US,
Hmm.
has driven an entrepreneurship culture, especially among the younger generation. So, like, folks under 30 have a far greater entrepreneurial bent. And you can see that in the number of startups in Japan. And in fact,
Yeah.
the ecosystem there is just rocketed.
Hmm.
So, what the equivalent of Silicon Valley in Japan is really heavily clustered in the Shibuya area of
Hmm.
Tokyo. And that Shibuya area, which is now sometimes called Bit Valley, is home to lots of startups. They're very different than maybe startups you might see in the US. The
Hmm.
ecosystem, the opportunity to go public was a much stronger direction in Japan than it has been in the US. And so a lot of these startups relied on friends and family. And once they got to a certain level, they did accept outside equity. There often wasn't a lot of ownership of shares among
Hmm.
either leadership or even the rank and certainly the rank and file.
Yeah.
That's evolved over time, so now there is greater ownership, and the legislation in Japan has also moved in that direction. And it hasn't hurt that if you look at the, let's say, roughly 40 billionaires in Japan today,
Hmm.
a huge number of them have all been entrepreneurs. So
Yeah.
I'm sure many people are familiar with the Uniqlo retail centers
Sure.
across the world. And Yanai-san, who founded that, of course, is an entrepreneur. Um, in fact, the third largest Japanese billionaire founded a company called Kiens, which is the best performing Japanese stock over the last 30 years.
Hmm.
So you'll see number two slot, by the way, is Masayoshi Son, who is the founder of SoftBank and probably
Sure.
best known to a lot of people. And so a lot of these entrepreneurs, of course, have a global background. Son, for example, having been partly raised and educated in California and made his first money there. And
Hmm.
that probably sets them apart from a lot of the older generation Japanese entrepreneurs and investors.
Yeah.
The market for Japanese equities globally has really rocketed as well. And, it's hard to believe we've just in July passed, or just this year passed
Hmm.
the all-time high and the Nikkei, which was back in December of 1989. And we just passed that last month.
Hmm.
The market has slipped a little bit since then. But during that period of time, during those roughly almost 40 years, 35 years, the market and the ecosystem in Japan has dramatically evolved. In the past,
Yeah.
it was largely driven by banks such as ours. Now,
Hmm.
now alternative finance is a real factor. And
Hmm.
more importantly, GPs are in Japan in droves. So KKR, Bain, um, Carlyle have all raised record-sized funds for buyouts in Japan. And in fact, just this week, there was a big announcement of a really interesting development, which is a potentially hostile bid for Seven and I, which is the owner of the 7-Eleven chains, which are ubiquitous, certainly here in the US, but also dominant in Japan. And that's really
Sure.
meaningful. That's meaningful in a bunch of ways because there's been new legislation that have changed the opportunity for foreign hostile bids. In the past, Japan was pretty much a closed market. It was very difficult to make those kind of acquisitions. And
Hmm.
M&A was usually not an outcome or a opportunity for entrepreneurs. Today, it's increasingly becoming so.
Yeah. What are some of the changes on the regulation? Is it, I'm assuming it's just to make it easier for international entities to just go in and bid at an American company, and I guess what's driving that in your opinion?
So there's several things driving it. The
Hmm.
regulations have come from two sources primarily. The
Hmm.
Financial Supervisory Agency, or FSA, which
Yeah.
is the equivalent of Japan's SEC,
Hmm.
and MITI, which is the Ministry basically the governing body for all industry in Japan.
Hmm.
Those two entities passed and widely announced new regulations that, number one, permit hostile bids to happen. In the
Hmm.
past, that wasn't the case.
Yeah.
Require company boards to examine these hostile bids and accept alternative bids, and force them to be transparent in their decision making. So there's a number of smaller, let's say, kind of more technical elements to those regulations, but
Hmm.
those are really key. So, and that's one of the elements. The other element that's driving this is the fact that, no surprise, I'm sure all of your viewers who are familiar with Japan are aware of the demographic challenges that Japan faces today. And what that means in practice is that the millions, literally millions of small businesses in Japan that are
Hmm.
not publicly traded have a leadership crisis. So many of the founders of these companies are retiring and literally cannot find someone to take over the reins of the company.
Sure.
And so that is driving acquisitions at a ground level. And it's also providing let's say, air cover for the change that was required and necessary for Japan to accept hostile bids from overseas. And
So
that's
when you
driving
say,
by.
and real quick, David, so just to
Sure.
unpack that a little bit. So when you say that they can't find somebody to operate the company, is it just because the operator or the owner is just kind of retiring, or it's just they just have issues? They're just having operational issues trying to find the right leadership, or can you just kind of unpack that a little more?
Yeah, no, it's real
Hmm.
simple. It's
Hmm.
the uh, there was a great New York Times article on
Hmm.
this, let's say in early 2023. I'll find it and send it to you as follow-up.
Yeah.
But what that article shared, and what is, let's say, kind of very widely known in Japan, is that
Hmm.
many children of founders of small companies don't want to take over the reins of those companies.
Yeah.
And many individuals in Japan that are working at these companies don't have a desire to take on the burden and the obligations that come
Hmm.
with running those companies. So, and these are not companies that are losing money. These are companies that are profitable.
Hmm.
So what's happening there is oftentimes the founder, who is 70 or 80 or sometimes even older, eventually says, I can't do this anymore, and
Hmm.
closes the gates, closes the company up, and then the company ceases to exist. So
Yeah.
these companies are oftentimes outside of the main metro areas, or
Hmm.
they're in, let's say, kind of tier two or tier three cities. The traditional supply system in Japan has relied upon these companies that were able to provide first-rate craftsmanship in whatever manufacturing area they were in,
Hmm.
together with, let's say, reduced costs, but just-in-time delivery. And that combination, of course, is difficult to compete with, but it's certainly difficult to manage unless you're already familiar with the business.
Yeah, no, that's helpful. Yeah, I mean, that's a good point. And then just kind of to piggyback off of that, where do you see kind of the next gen's heading? They don't want to run their own, their own family's business, or just take on a legacy business. It sounds like, I'm just assuming there's just a lot of entrepreneurial spirit there, where people are just going out building their ventures. It seems like there's the community and the infrastructure now to kind of encourage that as well. And now there's a lot of programs in place so that people can, work with Southeast Asian markets as well, right? So I'm assuming that's what it is. I mean, that's kind of where the youth is heading. But is that a fair depiction or assumption?
Yeah, I'd say the youth today, the ones that I've encountered, first
Hmm.
of all, they're usually globally educated, right? For the
Hmm.
most part, educated
Yeah.
either in
So
Europe or in
most
the
of them go
US.
out of they leave the country to go to college and maybe do their MBA or masters or something like that.
That's right. They'll get their
Yeah.
undergrad in Japan. They'll get their master's
Hmm.
overseas. A lot of them, Australia, for example, has a
Hmm.
work study program where visa free they can, or not visa free, but essentially without much red tape, Japanese individuals can go to Australia, learn the language, learn
Hmm.
English, of course, and pick up some entrepreneurial bents. And of course, the U.S. and the U.K. and other parts of Europe are still strong targets. But
Yeah.
these individuals come back, they see things that spark their interest,
Hmm.
and then they see ways to mold their ideas into something that's truly Japanese. And so many of them are really focused on the domestic market. I mean, Japan
Hmm.
is still the world's third/fourth largest economy in the world, which means that there is a huge domestic opportunity for many of these young entrepreneurs. The
Hmm.
second thing is funding, of course, has become more widespread. Unlike in the US, there wasn't really a VC ecosystem to
Hmm.
encourage those young entrepreneurs. And there also wasn't the, let's say, regulatory framework to allow them to borrow or to receive investments that weren't really bank driven. So, for
Yeah.
example, today, entrepreneurs in the US can rely on SAFE, which safe funding
Hmm.
to get themselves started up and basically have kind of some sorts of capital that doesn't overburden them with debt.
Hmm.
Japan has copied that. They have a thing called JKISS, J dash KISS, which is
Hmm.
basically a very, very similar to SAFE kind of structure,
Hmm.
which means that the paperwork and regulatory framework just are much easier for entrepreneurs to adapt to. There's also a
Yeah.
number of organizations in Japan now that are really entrepreneurial supporting and
Hmm.
enable them to tap into things that we entrepreneurs here in the US would take for granted. For example,
Hmm.
knowing who the possible VCs are that might invest in their firm, having some idea of what the criteria are, having some idea of, let's say, templates for term
Hmm.
sheets and so on and so forth. So that now all exists. And of course, it's a rapidly reinforcing ecosystem when you have those things in place. And so
Yeah.
there's the velocity of money floating around in this area is just
Hmm.
incredible. I mean, if you look at the statistics, and I think you were referring to some of the Bain and Company report on Japanese private equity that came out
Hmm.
earlier this year. I mean,
Yeah.
you can look at just, let's say, 10 years ago compared to today. It's a multiple of more than 10 in terms of
Wow.
the number of opportunities. So
Hmm.
it's really the place to be right now for private equity.
Tell me about some of the hot markets that you're seeing in the entrepreneurial, maybe VC ecosystem is, when you think about different markets, I know Korea has a huge gaming ecosystem. There was a fund manager that graduated from our fund accelerator that lives in Singapore and only invests in Southeast Asian fintech. So with Japan, what are some of the really hot markets that they're really concentrated on, right? And you see some trends based on geography, but would love to just learn a little more about the startup ecosystem. Are we seeing a lot of AI, Gen AI companies? Are we seeing a lot of infrastructure companies come about? Maybe you can just give us some macro signals in terms of where the tech ecosystem is going, maybe from early stage all the way out to PE.
Good question. So, in terms of offshore geographies, Japan has traditionally looked at, let's say, kind of two big economies, no surprise, China and the
Hmm.
US.
Sure.
But over time, just like a lot of other places, India is
Hmm.
hot right now, and Japan and India have a long positive relationship.
Hmm.
And that is in part driven by current geopolitical issues, but also
Hmm.
driven by a number of other things. Japan is a heavily Buddhist country,
Hmm.
and Buddhism, of course, began in India, and that is one of the, let's say, kind of the same way that the West looks to Greece as
Hmm.
the origin of thought and philosophy. Japan looks to India. So I'd say
Yeah.
India is top of mind. Vietnam
Hmm.
is another area that has a lot of interest.
Hmm.
Thailand has also generated a lot of interest because of other shared interests and kind of commonalities that tie in, and also
Hmm.
the let's say the ecosystem of entrepreneurs from or individuals that have learned and studied in Japan from
Hmm.
Vietnam, India, Thailand, the Philippines. Those individuals, of course, bring back language and cultural familiarity with Japan, as well as
Hmm.
some practices and contacts. And that has helped fuel the growth in, let's say, kind of offshore interest that is not directed to either China or the US.
Hmm.
In terms of where those different ecosystems kind of play, Japan, in terms of growth, once a company gets to a certain size, the domestic market is saturated and they need to look overseas.
Hmm.
So, manufacturing, of course, has shifted, just like many others have, away from China and to Southeast Asia or India.
Hmm.
Um, Others, such as those looking for bigger markets to tackle, have looked, of course, at Western Europe and US. And those
Hmm.
that have, in terms of buyouts and kind of that level of private markets interest,
Hmm.
that's still largely focused on North America, especially the US. And,
Yeah.
and, and again, that's simply because the opportunity set here is so huge, right? I
Hmm.
mean, if you look at the amount of dollars deployed to the private markets in the US, it's, I don't know, something like 60% plus of what the global number is.
Yeah.
So that alone means that Japan will always look to the US in some way, shape, or form.
Hmm. No, it's exciting. And I mean, it was really interesting to hear about 7-Eleven and why that was, a hostile takeover at Target. I guess what, and this could just be public information. What are some other notable, are you aware of any other just, interesting hostile takeovers and maybe your thoughts on like why those happened? I mean, 7-Eleven seems like it makes sense. I mean, they're like a global brand and, no matter what people always, I just went to 7-Eleven when I went to Fort Lauderdale and it was great. Everything you need is there, right? I mean, so it's just kind of an all around convenience store. They got food and I even saw them, I think, when we went to Dubai. So it's definitely like a global brand. So it's a massive opportunity. What are some other, takeovers that you thought were interesting? If you have any, and then maybe some that you think could be interesting. Like I think like Shake Shack is something that we're seeing as a crazy global phenomenon, right? Any country you go to now, there's a Shake Shack. So I don't know the background between who owns a lot of these conglomerates, and a lot of them I feel are rolled up into some larger family holding company. I always joke around with our buddy Amir because he loves that. He's probably going to watch this soon, but there's that. It's off the top of my head, but there's this kind of Thai place that he loves going to. Wagamami, I think that's what it is. He loves going to that place, and I actually was interested because I actually Googled the restaurant, and it's part of like a larger, massive conglomerate. So, just any reactions to what I'm saying, or any kind of thoughts around, just kind of maybe the next hostile takeover, or just something you've seen in the news recently.
So great points. First of all, I love Wagamama as well, but which is a Japanese term that kind of means like kind of playfully selfish is maybe the best way to put it. It's
Yeah.
selfish with some nuances. But anyhow, leaving that aside, in terms of hostile takeovers, the great thing about this Seven and I takeover, there have been a few hostile takeovers in Japan.
Mm-hmm.
Daiichi Life made a hostile takeover of a kind of the equivalent of a 401k
Yeah.
provider.
Mm-hmm.
That was like 12 months ago. And that was interesting because it happened in Japan and
Mm-hmm.
because it happened amongst Japanese entities. But
Yeah.
the Seven and I hostile takeover is kind of, as Nicholas Smith over at CLSA termed it just a couple days ago, is
Mm-hmm.
kind of the barbarians at the gate moment for Japan. If you're familiar with
Sure.
that great
Oh
book that
yeah.
came out years
Absolutely.
ago about RJR Nabisco. And this is really important because if this works, and so far the Kushtard folks are following the guidelines very religiously, and so
Mm-hmm.
are the folks. And people forget, Seven and I has a chairman of the board that is actually an American, Stephen Dacus, who was head of Walmart Japan. He's retired. So he's familiar with Japan. He's familiar with how things are done in the West. So I would imagine this will be the template that many other Japanese companies will then be expected to follow
Mm-hmm.
going forward for any hostile bids. But this one is a big one. And people outside of Japan may not realize this, but the other likely players to be involved in this, besides, let's say, non-Japanese private equity firms, are probably the telecom companies. KDDI and NTT have long looked at the convenience stores as great distribution channels for them and great
Mm-hmm.
ways to offset their revenue stream. So you'll probably see more of that happen. And certainly Couche-Tard, which their market cap right now is just under 60 billion US.
Mm-hmm.
And if they take out Seven and I at the 40% premium to Monday's close, which was, I think, the idea, then that will make them roughly equal in size to each other in terms of market cap. So this could be, and just for the record, the 7-Elevens here in the US can't even hold a candle to the 7-Elevens in Japan. This is not cultural snobbery on my part. This is simply When you go to the 7-Elevens in Japan, the food quality is off the charts, the service is off the charts, the cleanliness is typically in line with the high standards that Japanese have come to expect,
Mhm.
and foreigners visiting Japan have loved. And so you'll see if that happens and that level of let's say attention to detail spills over outside of Japan, then this will be a great win for pretty much everyone. So
Yeah.
anyhow, so it'll be interesting to see. So where will future hostile takeovers happen? It wasn't a hostile takeover, but earlier this year, you're probably aware that several private equity firms took private Toshiba, and there's a number of other companies that, like Toshiba, may have reached their limit in terms of business development in Japan and their expansion overseas, and really need to be taken to another ecosystem or another level of management in order to continue to
Hmm.
grow. And I would think, especially since Bain, Carlyle, KKR, and a bunch of others have raised record size buyout funds for Japan, we will see a slew of these hostile takeovers and bids going forward. And especially because if you look at Japan, publicly traded companies or private companies, they're being exchanged, bought, or sold at EBITDA multiples that are half
Hmm.
those in the US. So this is despite having great profits and very, very slim and efficient operating systems. So I think you'll see a large number of these happen over the next several years as this kicks in.
Yeah, no, that's really exciting. And I just think there's a lot of energy and momentum happening in that direction.
Yeah.
What are some of the challenges that I think need to be addressed with like just US and Japan, LPGP relationships, and also kind of what are people looking for in managers as they're kind of looking across both both seas, right? Like when US investors are trying to get access to Japanese, alternatives. What are some things that they should maybe consider or look at, and then same thing vice versa.
So in terms of LPGP relationships and any kind of relationships cross
Hmm.
border, I mean, the very first thing is cultural misunderstandings, right? There are
Interesting.
certain things that are there are certain ways of approaching things that Japanese take that tend may strike Americans as slow moving,
Hmm.
but for Japanese, there is a after having been through 3 decades of difficult times, they
Hmm.
are cautious, needless to say, and they're not likely to pull the trigger at the first opportunity. So there's
Yeah.
a certain risk averseness that the Japanese take to all business transactions. And that means that any US GPs or anybody that's trying to sell anything in Japan or try to strike a relationship with a Japanese entity simply has to be mindful that it will take some time for them to get comfortable with you. And
Hmm.
part of that is, just being aware of what those cultural nuances are. And the other part is recognizing that for the Japanese, my wife is Chinese, and so the Chinese and the Japanese, while having some cultural similarities, are in many ways dramatically different. Chinese will often strike deals at a handshake, kind of like Americans would. Japanese will take a long time to get comfortable with you. And the little tiny things really matter to the Japanese.
Yeah.
If you um, if you submit a document and it has one spelling error, they will take
Hmm.
that as a sign that you don't really pay attention to details, number one. And if you can't pay attention to small things like that, how likely are you to pay attention to the big things? So there's many other examples like that. So I would suggest first of all, there's a huge opportunity in Japan for U.S. managers, whether
Hmm.
they're cheap, whether they're on the private side or the public side, but
Yeah.
it will take a long time for you to develop that relationship. And as long as you're mindful of those cultural landmines that exist between any two cultures, but are especially stark between Japan and the rest of the world, you will be successful. So just like anywhere, um, enthusiasm, earnestness, and a good product go a long way to making the sale.
Mm-hmm. No, that's great. I mean, I think really, definitely when you think about product market fit, right, just helping people understand the product. I feel like I feel like there's a lot of great managers that have great access, great deals, but they just can't close capital. And I think the biggest issue is their positioning or just storytelling. Like, I mean, to understand what their product is, you really need that one liner to help get the message across. And I think if it's so complicated, or if your messaging is like 3 to 4 sentences long, you lose them after like the 3 to 4 words in the beginning of the sentence. So I think, people that can story tell better, that probably have, at benchmark returns, probably will do better than people that are claiming they have amazing outsized returns or outsized opportunities that just can't get the message across. I feel like it's the communication plus having the great product. And in this market, it's just even more difficult than ever to get people over the line, especially when you're dealing with cross-border entities trying to work with each other.
It's really it takes time. One has to, and if you, I mean, those who in your audience who may be thinking of going to Japan to either raise capital or to find opportunities, it's just think of what sells well here, and if it's a high quality offering that you have, the Japanese will be interested. I mean, Japanese are perennial students, right? They're constantly trying to learn more, improve themselves, study what's best practices are in the US and elsewhere. And so they're very aware of the outside world, and they're looking for things to be custom crafted so that they fit the unique cultural parameters that Japan has. So again, strongly encourage everyone who's watching this podcast to explore Japan. And I would just say, make sure you do your homework.
Yeah, no, that's really helpful. What other advice would you give for GPs trying to engage with LPs? I know you talked about kind of just making sure that your understanding of their pace in terms of like, the diligence. What are some maybe just common mistakes that you've seen that managers have made beyond just kind of like being patient? What are some other just cultural things that we should think about?
Cultural things. Well,
Mm-hmm.
it's speaking of my own personal experience and having represented a US firm in Japan, and cringed every time my colleagues from the US would come over and make cultural mistakes. And some of these are simple ones, like, for
Yeah.
example, business cards. Everybody has seen probably the perennial exchange of business cards between Japanese. That's a really important part of the, let's say, getting to know you, right?
Got it.
So
So if you
taking
don't
it,
have a bit, so some of the next gen people that don't carry business cards around, they're like, hey, I don't have a card. Just check me out on LinkedIn. I guess that's kind of seen as maybe unprofessional or unprepared.
every one of those little
Mm-hmm.
differences will
Yeah.
make it that much more difficult to develop a relationship.
Mm-hmm.
So, but I'm not talking about just having business cards. I'm talking about, like, for example, handing it correctly, respectfully receiving it,
Mm-hmm.
not dishing them out like cards in a game of poker, or
Sure.
not writing on the business card that you've received from somebody. Simple things like that. Other things would be, no surprise, maybe, not displaying strong emotion or anger, slamming tables,
Mm-hmm.
trying to do the quick sell as you would in the US, right? That
Yeah.
just won't work.
Mm-hmm.
That'll just turn people off.
Yeah.
So, and then last but not least, I mean, this sounds self-evident, but even though many people in Japan, especially the younger generation, speak English to a certain level, just like anywhere, they all prefer to see things written or said in their own language. It just makes sure that they can check and make sure that they understand what is this meeting about. So to the extent that you can, let's say, acclimate your marketing materials for Japan. Simple things like using what the Japanese call a kaisha gayo, a corporate
Mhm.
outline, which is like kind of a one pager on who your firm is, but obviously in Japanese, and following those kind of guidelines. Those will go a long way towards building the bridges that you need to close business with the Japanese.
Yeah, no, that's really helpful. Well, David, really appreciate all this wisdom and guidance and just the deeper insight into just that ecosystem of Japan, and just helping us understand how to bridge that relationship much closer. And appreciate the friendship, and excited to catch up the next time I see you. I think I'll actually see you tomorrow. So excited for all of the exciting things ahead. And again, thank you so much for your time and your insight.
Joel, thank you for having me. Delighted to be here. Delighted to enjoy some of the cultural introductions you've made to me, and not just personal, but culinary as well.
Mhm.
And looking forward to seeing you tomorrow as well as in the future. So thank
All
you.
right. Take care. Thank you.
Okay,
Really
thank you.
appreciate it.